I think the biggest lesson we learned from past 12 months is that we really need to focus. We even need to strengthen the focus on assets which are worth, also to stretch a bit the pricing, because like this is something which has been asked as for today. There's always been the demand for stretch, and I think like what we really need to focus on those assets which are worth and which are compelling enough to do that. And I think that's one of the findings or results of the past 12 months, probably will agree.
So one thing is the investors had to move because the product wasn't there. What is on the market today, I'm not talking about you, some people call it core product, what is actually with regard to shopping centers on the market, but Henrike can tell that better than me. Would an investor sell a core product today? A real core product?
Depends on the price.
You know, what has really changed, I think, if you went back 2 years ago, investors were asking themselves whether retail as a property class made sense with everything going on on the internet. Were we actually going to need shops anymore? And guess what? We do. There's been a massive shake-up, and clearly certain elements of retail don't need as many shops anymore or as many big shops. But investor sentiment has massively swung back towards retail with a realization that, yes, shops do still have a future. Shopping centers have had to adapt. We don't have quite the same anchors. You know, Primark will generate sometimes a footfall which is higher than a hypermarket, for example. So there's new things that's happened in shopping centers, but generally investors have realized that it is a good place to invest your money. And that's a fundamental change on 2 years ago when that was an open question. Okay, so that's the first big change.